Wait, did you just feel your wallet vibrate? The Federal Reserve just slashed rates by 0.25%. But here's the bombshell. This could be the last cut of 2025. What if I told you your next home loan just got cheaper? Or did it? Stick around, your real estate empire depends on it. Hens. In a 10-2 vote on October 29, 2025, the US Federal Reserve delivered its second straight quarter-point trim to the benchmark interest rate. This brings the federal funds rate to a range of 3.75% to 4.00%, a deliberate signal amid economic fog. Fed Chair Jerome Powell was clear. A further reduction in December is not a foregone conclusion. Why the hesitation? Blame it on a government shutdown starving the Fed of fresh data, like the delayed September jobs report, and stubbornly sticky inflation hovering above the 2% target, fueled partly by import tariffs. Small note, two dissenters, one pushing for a bolder 0.50% cut, the other for no change, highlight the divide. Nationally, this cut is a calculated boost to an economy teetering on resilience. Lower rates mean cheaper borrowing for businesses and households. Think entrepreneurs refinancing loans to fuel expansion, or families tackling credit card debt without the squeeze. The Fed's laser focus. The labor market's chill. Hiring has slowed to a crawl, with low turnover signaling caution. By easing rates, they're aiming to spark job growth without reigniting inflation's embers. Early wins? Markets cheered. The Nasdaq hit fresh highs, and two-year Treasury yields ticked up on tempered cut expectations. But risks lurk. With data blackouts from the shutdown, the Fed's walking a tightrope, overdo the cuts, and inflation could surge, pause too soon, and recession whispers grow louder. For entrepreneurs, it's prime time. Lower capital costs could supercharge startups in tech and retail. Yet, all caps warning. Consumer confidence hinges on December's call. Odds of another cut now sit at just 70%. Zoom out, and this US pivot sends shockwaves globally. As the world's reserve currency, the dollar's sway means cheaper US rates often weaken it. Good news for exporters worldwide, but a headache for dollar-pegged economies like those in the Middle East. Europe's central banks may follow suit, eyeing their own cuts to combat sluggish growth, while emerging markets brace for capital outflows chasing higher US yields elsewhere. Tariff tensions. President Trump's policies have already nudged global prices up. This cut could temper that, easing import costs from China to Canada. For international real estate moguls and cross-border entrepreneurs, it's a green light. Weaker dollar boosts overseas investments, but watch for volatility. Gold dipped 1% post-announcement on cut uncertainty. Small insight, the Fed's balance sheet unwind ends in December, potentially freeing up 100 bps monthly for global liquidity. Now, the moment real estate warriors live for, housing's big unlock. This 0.25% trim directly feeds into mortgage rates, potentially shaving the average 30-year fixed below 6%, a lifeline after years of 7% plus pain. Translation? Buyers flood back, inventory thaws, and sellers dust off listings. Nationally, expect a 15 to 20% surge in home sales by Q1 2026, per early forecasts, as affordability rebounds, especially in Sunbelt hotspots like Florida and Texas. For entrepreneurs flipping or developing, it's gold. Cheaper construction loans mean faster builds, higher ROI. But bold caveat, if December stalls, rates could yo-yo, freezing refinances mid-stride. Globally, US expats and foreign investors eye bargains as the dollar softens. Think London funds snapping up Miami condos. Yet inventory shortages persist. Savvy agents position now for the rush. Your move? Lock in pre-approvals before the herd. The Fed's 0.25% cut isn't just policy. It's your cue to pivot. In real estate, entrepreneurship, and beyond, lower rates rewrite the rules. Act now. What's your first play? Buy, flip, or hold? Comment below, subscribe for weekly breakdowns, and hit that bell. Your edge in business news starts here. Thanks for watching. The market waits for no one. Scroll-stopping hook generator for real estate, entrepreneurship, business, and real estate news niche. This hook generator is a plug-and-play matrix tailored to your niche. High-stakes money moves, property flips, market disruptions, and entrepreneurial wins. It's engineered to hijack attention on social feeds, e.g. YouTube thumbnails, TikTok, Instagram Reels, LinkedIn posts, where users doom scroll past 90% of content. Core principles, built-in, pattern. Interrupts, sudden, jarring shifts, e.g. weight or counterintuitive facts to break visual flow. Psychological triggers, FOMO, fear of missing out on deals, authority, Fed-level insights, scarcity, limited cuts. Curiosity gaps, tease what if or hidden truth without spoiling, e.g. cheaper loans or a trap. Power phrases, command action like claim your edge or don't get left behind. Viral structures, question plus twist, e.g. is this a buyer's dream? Numbered urgency, 3 moves before rates flip. Story starter, I almost lost 50k until, or bold prediction, 2026 boom incoming. Hook matrix, 4x4 grid, rows, hook types, columns, niche angles. Mix match, for endless variations, test on A/B thumbnails for 20-50% scroll stop rates. Hook type, niche angle.
Your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.